You know, I hear all the time that day trading is one of the riskiest and most confusing ways to make money. But once you nail down how to trade with the right framework, you can make money consistently and predictably in no time. Learning how to day trade has been the most impactful decision of my entire life. It took me out of my 9-to-5, it let me take vacations whenever I want to, but to get here, it took way too long for the same reasons you probably know. All the nonsense young gurus are spewing horrible information that will never make you money in the markets. So if you can relate to what I just said, watch the end of this video because I'm going to give away my simple 20-minute trading framework to make 5 figures per day consistently. Now, before I share with you that though, the reason why most of you do not have any profits from trading already is because you don't have confidence in your framework. Now, I promise everyone is telling you, oh, go trade 20 minutes before market close, or buy when the price is retesting a trend line. But no one is telling you what they are actually doing to find these trades every single day. That's why I'm going to expose my simple framework to help you become profitable in no time with day trading. So if you're wondering who I am, my name is Andrew, and I went from hating my life working as a corporate finance worker to becoming a full-time day trader. I now help others who were just like me and hated their 9-to-5 and want to learn day trading. By using the exact same trading frameworks I'm going to teach you in this video. So if you want to learn how to make money day trading with my true and tested trading framework, watch this video until the very end and I will reveal everything you need to know to make money day trading. Okay, now before you come at me with the pitchfork, I want you to know that a stock chart doesn't have to be as intimidating as what you probably think it is. Now, just like anything in life, when you come into something brand new, it can look very intimidating, it can be confusing, and it can be really daunting to look at something when you really don't have any idea of what it is that you're truly looking at. So the platform that I use is a brokerage called Webull. I think it's very, very easy. The charting is very clean for me to understand. They also have a great mobile platform, and as a mobile trader, for me, it's perfect. I don't have to pay any money to trade. I can drop the link for Webull down in the description for you, and you can actually pick up some free stocks just by downloading that link. But what I want you to understand here is that there are different time frames within a chart that will allow you to really understand what's happening and really what the psychology of these buyers and sellers are telling you with a chart. So in this example here, we're looking at General Motors, ticker symbol GM, and I'm looking down here at the W, which is the weekly chart. So every single one of these candles represents 1 week worth of price action. That's Monday through Friday, where the price opened. As you can see up here on the top left, we have OHLC. So we have the opening price, the high price, the low price, and we have the close price on any single week that we want to look at as we hover over every single one of these candles. When we look at stock charts and we look at any market in general, we're always going to have some level of support and resistance. We're going to have some type of price stability, and we're going to have an area where price is probably going to resist passing through a certain area because sellers are just active sellers at that point. When we look at the stock chart, we can see this play out really, really well on the weekly time frame. As you can see here, back in November of 2020, we had a hard time getting over this level of 45.98, or we can just call this the 46 psych level. Oftentimes in the stock market, you're going to hear people talk about psych levels or psychology levels. These are just levels where people have whole dollars because as humans, we like to buy and sell things when numbers are even to us. So I call this the 45.98 key level or the 46 psych level. Now, again, we had a hard time getting over this level in November of 2020, and then we finally got up over this level with a massive bullish engulfing candle, very, very strong candle up over this level in January of 2021. And it wasn't until September of 2021 that we actually came back down and retested that psych level or that 45.98 level as current support. Now, oftentimes what's going to happen in the market is you're going to see support flip to resistance, and you're going to see resistance flip to support. What that means is that that is just a key level on the chart that we need to be aware of as traders, because as price moves up to a key level, there's a chance that we could see some resistance. And as price moves down to a key level, there's a good chance that we could see some type of support relief bounce at that key level. So again, as you can see, in September, we bounced off this key support, which was prior resistance, and we pushed all the way back up, right? And we could actually probably even add a resistance level on this weekly time frame up here, let's say around 62.68. Now, I'm gonna make this the same color, and you might be wondering, why do I put my support and resistance at the top of a candle and not where the candle wick is? And the reason for that is because the best analogy that I like to use is think about it like this. this. When you go to sell your house and the realtor tells you that they'd like to list your house for $600,000 and the house actually sells for $580,000, what price is the price that really matters, right? It's the closing price that matters, what the house closed at, which was $580,000 in that example. In these examples on the stock chart, what we're seeing is that price did go past the 6268 key level that I've identified on this weekly time frame, but the majority, actually all of these weekly candles, have closed underneath of that 6268. So on the weekly time frame, we haven't been able to get a weekly candle close over 6268, and therefore that's my key level to the upside. So as we can see, again, we bounced off of that September support area at 45.98. We pushed up to our resistance level at 62.68, and then we came all the way back down here and we held our 45.98 level once, and then the very next day, the very next start of the week, we actually gapped down underneath of our level, and you can see it became resistance, right? So we have resistance back in November of 2020. It became support in September of 2021. We lost this support level in March of 2022, and then in April of 2022, it flipped back to resistance. And then you can see in more recent times here, April of 2024, it's still resistance. In May of 2024, it's still resistance. And as you can see, the week that we're currently on now, we actually broke out on GM over that 45.98 level. So now I would anticipate a move happening similar to what happened back in 2021, right? When we went from 45.98 all the way up here to the 62.68 level. Now we'll come back to this video in a few months and see where the GM prices went. But if historical price action is indicative of future behavior of buyers and sellers, which it definitely is, I would anticipate that the price of GM is going to be moving up into that 62.68 area. This is just to say that key levels are the foundational element to any successful day trader in the market. Now, if you want to learn how to do these key levels in more detail, I'm going to drop down a link for my 101 course in the description. That 101 course is going to take you through everything, through technical analysis, levels, candlestick patterns, taking you through how to build a watch list, how to actually enter the trades, and then how to look at your risk management while you're in those trades as well. So one of the things that a lot of people hear me say, and a lot of my students often hear me say, sometimes they think I say it too much, is that price consolidation often leads to range expansion. What I mean is that when price consolidates in a specific area for a specific amount of time, for a short amount of time, eventually when that breakout happens, the breakout is going to lead to some type of range expansion, right? If we're trading within a range, if we're in a consolidated range and we break out of that consolidated range, we're going to see some type of expansion of that range. Now, as an options trader and a person that likes to flip the premium on call options when we're moving to the upside and then trade put options when we're moving to the downside, I need range expansion in order to make money in the stock market. If I have a stock chart that is trading sideways all day long or day after day, very, very hard for me to make money because the premium ranges don't have much range to them. And I want you to think about this as any marketplace would, right? If we're buying a house and we're trying to sell a house as an investor, I want you to think of this as you're going in to flip a house, but you're not actually able to add any updates to that house. So you bought the house at, let's say, $100,000. You're not able to go in and actually do anything to that house. The price is going to stay consolidated in that $100,000 area because you don't have the ability to see any range expansion on the price of the house because you're not able to actually go in and do any updates to that house, right? The stock market is the same way. In order for us to actually make money in the stock market, we have to have some type of range expansion. Now, the good thing with trading options is that it doesn't have to be to the upside. We can actually see stocks that move down $10, $20, $30, and we can make money as the stock is moving down. In the same way as the stock moves up, we can make money as well. Now, in this example, we talked about GM on a weekly time frame. I moved us down in here to the daily time frame, and we can see what this is, right? This is a very clear 3-bar up play on a daily breakout. Price consolidation, we see the consolidated price here. We're kind of stuck in range between $42 and $46. We've got about $4 worth of range. Let me actually illustrate this range for you as well using a shaded box here so you can kind of see where the price was kind of stuck between. But as we can see here, right, price could not close outside of the top of this range at $46, and we couldn't close out of the downside of this range down here at about $42. This is what we would call price consolidation on a daily time frame. Now, couple that with the fact that we have an upside resistance level, and we also have a huge weekly level that was prior support, flipped to resistance, flipped back to support, and now it's resistance. When this breakout happens, it's probably going to be a very big breakout. Part of the thing that new traders don't really do a good job of is having multiple points of conviction when you get into a trade, or multiple points of confluence. In this chart here, what we can see is we have price consolidation, which we know is going to lead to range expansion. And 2, we know that this is a daily breakout. 3, we know that this is a huge weekly breakout level. So if this breaks out, we know that it's going to be a very massive breakout. Now, what I'm gonna do here is go down into an even deeper level. I'm gonna go down into the 5-minute chart. Now I'm gonna scroll back here because this is today. You can see that market is still open right now, actually. I'm gonna go back here and I'm gonna show you what the breakout pattern looked like. And I'm gonna tell you what happened on this daily breakout and how we were able to capitalize on this in our trading community of Alpine Trading. So as you can see here, we got a massive move over that key level, that huge weekly level. This was all the way back on Monday of this week. You can see the breakout over 46. And then after that, it is just straight green candles all the way up. In fact, on this day alone, GM had a move at about 4%, I believe. It was a 4%, 5% move. Yeah, 4.5% move GM had from the breakout at open all the way until the high of day. Options contracts, weekly options contracts that expired on Friday. Again, this was on a Monday. Those contracts went well over 250%. And if we hung on to those same contracts going into the next day, GM went all the way up to $48.95 or $49 per share. And again, those options contracts went close to 500% just on this move alone in just 2 days time. So this is what that daily breakout looks like. And you'll know when the breakout happens, you're going to see very, very big green bullish engulfing candles if it's a breakout to the upside, or you're going to see very, very big red bearish engulfing candles if it's a breakout to the downside. Okay. Now in this example, you can see here, big green candle, hammer candle. So buyers kind of cooled off just a little bit. Sellers kind of took a little bit of control, and then the buyers stepped right back in and they just kept pressing higher and higher and higher all the way. And if you guys know me, you know that I like to use the 9 and the 21 EMA. Part of my strategy is find the momentum, find the trend, buy the pullback, and ride the wave. In this example, there was no pullback to buy here. It was a breakout pattern. We're buying the breakout as soon as it happens. And we're just going to use this 9 EMA, which is the yellow line, as our stop loss, right? Or at least as our trailing stop loss to say, hey, when we pull back into this 9 EMA, which is an exponential moving average, this EMA just kind of follows the price, right? It follows the price and the trend. As we pull back to that, I'm going to sell some of my contracts. I'm going to take some of my money out of the market to lock in profits and lock in gains. And you can see what happened. We kind of recovered back up here. And then the very next day, we jumped up again. So this is an example of how to trade a daily and weekly breakout with 3 different points of confluence. But what I want to hit on here, which is very, very important if you're still listening to this video, even if you're not a full-time day trader, even if you're not a day trader, the chart awareness that I'm giving you and the ability to understand what these charts look like are going to help you immensely when it comes to your IRA, when it comes to your long-term accounts, when it comes to your long-term equity accounts, whatever account you're looking at. An example here I want to give you is Costco. Now, this is one that I actually told my parents, hey, you might want to look at adding Costco to your long-term portfolios because we are seeing what I like to call price consolidation leading to range expansion on a weekly time frame. Now, let me show you exactly what I meant when I said this. Here is the weekly chart on Costco. And you can see we've had a lot of range, so it's taken me a while to resize this chart. But as you can see here, price consolidation, right? We have big range, which became tighter and tighter and tighter. And then at the apex, we broke out on Costco. However, this price consolidation lasted from April of 2022 all the way to May of 2023. So Costco consolidated for an entire year. And when it broke out on the weekly time frame, we went all the way from 480 all the way up here, 75% to about $850 per share. Today, we're trading at $855 per share. So even if you don't use any of the information in this video from a chart analysis perspective to hone in on your day trading and start to make $5,000, $10,000, $15,000, even $20,000 per day, like I've been able to do day in and day out, you can use everything in this video to really hone in on chart analysis as it pertains to your long-term stock accounts, your retirement accounts, and just make overall better decisions when you're trading in the market. And so that's exactly how I use my simple trading framework to make money every single day and become profitable. You can absolutely take everything I've said in this video and apply it to your own trading routine, but chances are that you're gonna run into a ton of roadblocks in doing so. As you just witnessed, there's a lot of confusion and complications involved in learning how to make money by day trading. You need to have the right framework, chart strategy, community, and know how to find profitable trades in general, all to name just a few things that go into making money faster as a day trader. So if you don't want to hit all of those roadblocks by yourself and, just learning how to day trade while working at your corporate job, I want to teach you personally exactly how to avoid the same mistakes 99% of beginner traders make. Now, all you have to do is click the link in the description, answer a few quick questions, and my team will get on a call with you at the time that you booked. If you don't know yet, just scroll through the case studies and book a call if you want to see those types of results, or again, don't. It's entirely up to you. Regardless, I'll see you in the next video.